In today's video, I have found 5 nearly unbelievable growth stocks, and believe it or not, one of them even has high dividends. So hold on tight, this is going to be quite the ride. I know many of you love those big dividend stocks. However, don't let the allure of dividends blind you to the thrill of growth stocks. As a wise investor, it's crucial to spice up your portfolio with a mix of both. Sure, dividend stocks are a comforting source of steady income, but let's not overlook the adrenaline rush that comes from riding the wave of a rapidly expanding company. By bringing growth stocks into the fold, you'll not only diversify your income stream, but also unlock the potential for soaring capital appreciation. And guess what? Sometimes growth stocks mature into dividend-paying darlings, adding an extra little sprinkle of yield to your investment buffet. Of course, if you want to be sold on some growth stocks, we need to make them big. And in just a few minutes, you're about to see some massive ones. Holy banana bread, we are going to need a bigger portfolio. Join the conversation. Let us know in the comments if you have a good sprinkling of growth stocks in your portfolio. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a big thank you for that click. I know you just want me to jump right into those growth juggernauts, but I do want to drop a few qualifiers. I only looked at stocks with a positive return on equity, and they needed to be priced above $5 for this list, as we are not going to be dealing with any penny stocks. So without any further ado, let's rock this list. Kicking off our list, we have Alvopetro Energy Ltd with a ticker of ALV. This one is on the NEO exchange, but it is also available for those of you using Wealthsimple. They are based out of Calgary, and they are a resource company that operates out of Brazil as they focus on the exploration, acquisition, development, and production of hydrocarbons. They have a smaller market cap of 288.314 million and a little bit less volatile than the market beta of 0.80. Their earnings per share comes in at 1.41, and they have a price to earnings ratio of 6.96. That return on equity, well, that's coming in at a very nice 49.80. And when we look at their debt to equity ratio, 12.34, that is absolutely respectable. Now, this is the one that has that really big dividend yield. In fact, their dividend yield comes in at 9.67%. Now, it is paid out quarterly in the amount of 14 cents USD per share. They have a payout ratio of 41.86%. This dividend is absolutely new, as they only began paying out a dividend in 2021. Interestingly enough, their payout ratio is actually really good for such a large dividend. All right, let's take a look at their returns. Their 3-year return on investment, it comes in at 363.28%. Add in the dividends, we get a total return of 408.64%. That's not too shabby. Let's look at their 1 year. So their 1-year return on investment comes in at 52.42% for a total return after we add in those dividends of 62.94%. That is also not too shabby as well. When it comes to 2023, the return on investment so far this year is only at 9.19%. Add in the dividends that they've received thus far, and we get a total return of 11.72%. Next up at number 4, we have TFI International with a ticker of TFII. This company is a transportation and logistics company based in St. Laurent, Quebec. They operate primarily in Canada, the US, as well as Mexico. They have a market cap of 13.615 billion, and their beta, it's a little more volatile than the market average at 1.47. Their earnings per share come in at 12.36, and they've got a price to earnings ratio of 12.71. Once again, we got another respectable return on equity coming in at 34.49%. Their debt to equity ratio comes in at 70.19. Still not that bad. When we come to dividends, they do have dividends. Their yield is small. It's at 1.223, which is paid out quarterly in the amount of 35 cents USD per share. Their payout ratio comes in at 12.86%. When we look at their returns, their 3-year return on investment comes in at 327.88%. Add in some dividends, and we get 338.51%. Switching over to their 1-year return on investment, we get 44.04% and a total return of 45.52%. And with their 2003 return on investment thus far this year, we get 18.36%. Adding in the dividends they've received so far this year, we get 18.70 as their total return. These numbers almost feel like bull market numbers. Coming in at number 3, we have Element Fleet Management with a ticker of EFN. We have seen this one before. They are a fleet management company based out of Toronto. They provide services and financing for commercial vehicle and equipment fleets for Canada, the US, Mexico, Australia, and New Zealand. Their market cap comes in at $6.914 billion, and they have a less volatile beta of 0.75. Their earnings per share come in at 0.93, and they have a price to earnings ratio of 18.95. Their return on equity comes in at 11.49%. Their debt to equity ratio, it comes in at 247.70. This is our only entry with a lot of debt, but it is not as bad as it seems, as a lot of that debt is caught up in their financing part of their business. Sure, I would like to see it smaller, but it was not enough to knock them out of the list for sure. They have a dividend yield of 2.27% that is paid out quarterly in the amount of 10 cents per share. Their payout ratio, nice and respectable, 35.37%. When it comes to return on investment, they have a 3-year return on investment of 71.92%, total return of 80.56% once we factor in those dividends. Their 1-year return on investment comes in at 49.96% for a total return of 53.07% after dividends are added in, of course. So far in 2023, these guys have struggled a little bit. They have a return on investment of negative 7.55% and a total return of negative 7.01%. So those dividends help a little bit. But this one's a little bit more on the disappointing, at least this year. But I imagine they will look really well once we start to head into the bull market. In our almost top spot at number 2, we have TECK Resources with a ticker of TECK.A. They are based out of Vancouver, and they are focused on mining and mineral development for coal, copper, and zinc. TECK Resources has been in the news recently as they've got a vote that's going on this week as to whether they're going to split the company in two. And there's also another company that's interested in buying them. So this will be an interesting one to watch. They have a market cap of $31.371 billion. Their beta is just above the average at 1.23. And they have an earnings per share that comes in at 7.63. Their price to earnings ratio, that comes in at 12.65. And they've got a return on equity of 16.19%. Their debt to equity ratio, not too bad at 37.78. When it comes to their dividends, that's not great. They've got a dividend yield of 0.518%. That's paid out quarterly in the amount of 12.5 cents per share. And their payout ratio, nice and low, 6.55%. Okay, let's look at their returns. Their 3-year return on investment, it comes in at 541.97%. That's a total return after we add in the dividends of 554.10%. Their 1-year ROI, that comes in at 70.71%. Add in the dividends, we get a total return of 72.45%. And if you think that ride is over, let's look at 2023. Their return on investment so far this year is 88.27% for a total return of 89.47%. Wow, that's not too shabby at all. Those returns were absolutely crazy. And we have one more extra dose of crazy for you. In our top spot, at number 1, we have Hammond Power Solutions Class A shares with a ticker of HPS.A. They are based out of Guelph, Ontario, and they design and manufacture custom electrical magnets, cast resin, and transformers. They supply both North America and also India. They have a market cap of $438.601 million. They've got a nice looking beta of 0.79, so they're not quite as volatile as the market average. When it comes to earnings per share, they come in at 3.77. Their price to earnings ratio is 9.83. Their return on equity, 29.60. Not too bad. This one I really love. Their debt to equity ratio, it's only 8.34. That's absolutely fantastic. When it comes to dividends, they have a yield of 1.349%. That is paid out quarterly in the amount of 12.5 cents per share. And they've got a nice small payout ratio of 10.21%. All right, let's talk a little bit about their returns. So their 3-year return on investment comes in at 510.08% for a total return of 528.35%. That's not too shabby. Their 1-year return on investment comes in at 197.66%, and they've got a total return of 201.09%. Once again, these are fantastic numbers, and when we get back over here into 2023, well, the ride's not over for this one either. Their return on investment comes in at 81.02%. Adding in the dividends, we get a total return of 82.63%. What a ride. These stocks were absolutely huge over the last 3 years, and even the last year. When you think about a high dividend stock giving you 14% a year, it can pale compared to a 500% growth. Of course, the only problem is 3 years ago, most of us never thought to bet on these horses to take it all. These companies have a history of insane growth. But always remember, past performance does not guarantee, well, future performance. With these stocks, I think there will be more growth to come, but who knows if it will be as impressive. Before you jump in on any of these stocks, always be sure to take that time to do your due diligence. You want to ensure these or any stocks you hear about on YouTube fit your personal risk profile. And you know what? Talking to a financial advisor is never a bad idea either. Keep the learning going. Watch my video on Nutrien or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.